Hello everyone, Mike Arnold here, co-founder, Path Trading Partners along with Bob Iacchino. So Tesla running down, testing that key trend line we've been talking about. Rallying back up, Tesla tweeted out that they'll have to extend discounts a couple more days because of the massive demand. I guess they couldn't handle the massive demand, which somewhat seems pretty fishy. It looks like just an excuse to extend discounts. Again, we think they're having a lot of trouble with cash flow and cash crunches are actually huge discounts. They're trying to liquidate a lot of stuff to bring in any kind of cash. That's why fundamentally it's bearish. And from a standpoint on the technical pattern, it's bearish. That doesn't mean we can't have bear market rallies in this stock. It does look like we might, if we get a little rally on, might make a minor divergence here. Right now, let me drop down the 4-hour chart first. Let's zoom in on the 4-hour chart right now. So the 8 is sitting right below this key ledge. So we're going to be watching for, on any rally, key resistance coming in just around 275. If we get through 275, then we have the top of the rotation zone on the 4-hour at 280 now. So those are the two very key levels. I don't know what would prompt it. Who knows with Tesla? But if we did have a massive rally, and remember we have this big gap behind here, the next key major reinforced level is now 290. So everything keeps ratcheting down. We had this prior support at 290 becoming key resistance now with the 50-period exponential moving average on the 4-hour. So that's going to be your major resistance area should you have a strong rally, but we're not expecting that much. So we're watching for 275, and then if we get through that 280 on any rally. Let's go back to the daily now. So now we've tested that long-term trend line. Let's see. If we break below that, still same key levels. 260, 259, 86, so essentially 260. Then we have another long-term trend line. We've talked about this coming in about 255 at this point, and then 249.63. I'm just going to call that 250. And remember, we've gone through we have lots of support down here. So there's lots of places for people to lean against and step in and buy. What's really critical is if it really breaks below about 248. 248 first. I really sorry. Let me correct that. About 245. 245. We break below that. You'll see a lot of stops hit. A lot of liquidation, most likely. So that's your very key level to the downside. Let's just double check our levels on the. We already talked about the major level at 290. The Exponential 50 already on the daily down to 300 with the significant level. So you see how all these levels are just ratcheting down and getting reinforced for any rally. So not looking terribly bullish does not mean we can't rally at all. This stock, has some pretty decent swings. But any rally at this is a bear mode rally that we'll watch to roll back over. So, like, for example, if it runs up to these key levels like 280, we'll watch for resistance and then a possible short or a sell signal up there and then a roll over to retarget some of these lower levels. So we have for you on Tesla, and we'll talk to everyone soon. Bye for now.